Hello, everyone, and welcome to this quarterly Hedera State of the Ecosystem. And today, I'm very fortunate to be joined by Sabrina Tachdjian, VP of Financial Markets at the HBAR Foundation, and Alice Kim, Business Development Director at the HBAR Foundation. So today, we'll focus on the recent growth and innovation within the Hedera ecosystem. More specifically, we'll highlight the growth in stablecoin adoption, the integration of tokenized financial products like money market funds, and also advancements in collateral mobility. We'll see how all these developments are driving adoption within Hedera and shaping its role as leading platform for decentralized finance, and allowing institutional blockchain solutions to exist. As a reminder, before we get started, this webinar and all the information contained is for informational purposes only and is not intended as investment advice. So that being said, let's get started. So let me start with maybe with Sabrina, and then we'll go to Alice. Could you please just introduce yourself briefly, your role at the HBAR Foundation?
Hi, Sacha. Thanks for having me. So I'm with the HBAR Foundation. I'm in the business development team, and I focus on growing the fintech ecosystem. So that covers real-world assets, that covers stablecoins, payments, and all sorts of good stuff.
And how about you, Alice?
Thanks, Sacha, to having us. I work with the Sabrina, and I'm pretty sure you know Greg Bell at the HBAR Foundation. We are on the same team, financial markets. As Sabrina described, we tackle stablecoin, RWA, tokenization, and all other cool stuff.
So without further ado, let's get started with stablecoins. I think that's, it's been one of the hottest topics recently, like wild adoptions that we've seen, the Genius Act being worked on in the US on the regulatory side, lots of things going on, of course, in Europe as well. There are some regulations going on with MiCA, etc. So since the start of 2025, Hedera has already experienced 150% growth in the stablecoin market cap. What factors do you attribute to that surge?
Yeah, we are very excited to see the growth in our stablecoin ecosystem, especially with USDC on Hedera, HUSDC. I think a few things are contributed to that momentum. First is the on and off-ramp infrastructure has really improved. More support we see from centralized exchanges, better fiat access points have definitely made it easier for users to move in and out of the ecosystem. At the same time, we see real growth in both DeFi and RWA use cases that naturally creates more demand for stablecoins, especially something like USDC that's widely trusted. And also, it aligns with what we see in the industry-wide. Stablecoins are becoming core layer for adoption. And beyond the infrastructure, I would say it's a combination of things like Hedera's strong tech, growing institutional interest, clearer regulation, as you mentioned, and very engaged ecosystem. I think it all add up.
Mm-hmm. And can you share a bit more insights about the impact that stablecoin growth has had, both on liquidity you see in the ecosystem, maybe also touching on adoption, the types of applications that are leveraging that growth?
It's definitely made a big difference, especially I think the areas that you mentioned, liquidity, adoption, and real-world use cases. On the liquidity side, stablecoins plays a key role. On Hedera, they help power deeper pools on DEXs like SushiSwap and HeliSwap, which lead a tighter spread and better trading experience for both retail and institutions. And for adoption, stablecoins definitely lower the entry barrier. They're familiar and easy to use, so they work well for payments, B2B transactions, and even remittance. So developers also like them, I think, also because it's easier to build app using stablecoins. Tools like Stablecoin Studio we have make it faster to launch compliant and ready to use solutions. And in terms of real-world assets, stablecoins act as a bridge, I believe. We are seeing them used to settle tokenized assets like real estate, carbon credits, which add both price stability and clarity around compliance, something institutions really care about.
Mm-hmm. Wow, so now you can even use your carbon credits directly with stablecoins, and I assume have more liquidity around the trading of those carbon credits and have better pricing and be able to move them around easier.
Yeah,
very, very, very interesting. I mean, another big area for growth for Hedera this year, speaking of liquidity, has been the significant rise in DEX volumes since the start of the year. So is that related to stablecoin growth on Hedera? What other factors or developments do you see have contributed to this significantly?
We believe it's definitely connected. Stablecoins, again, like USDC, have become a foundation of most trading pairs on Hedera. On SuperSwap, for example, USDC pairs are some of the deepest and most active. That kind of stability makes it easier for users to trade in and out of more volatile, tokens with confidence, which naturally boosts the volume. But it's not just swaps. Stablecoins are also fueling lending and yielding farming. We've seen a platform like a Bonds of Finance grow quickly because user can supply and borrow stablecoins with lower risk. And from the developer perspective, stablecoins are enabling more advanced DeFi use cases, like things like synthetic assets, structured products, and even cross-chain functionality. So the rise in DEX's volume is really about more users, better tools, and stablecoin powering the whole stack.
Mm-hmm. Great to hear. So now let's move over to Sabrina to talk a bit about money market funds and their tokenization. So recently, the HBAR Foundation announced an investment in Archax Tokenized Fidelity International's USD money market fund. What is the strategic significance of that investment?
Sure. I mean, I'd like to start by saying that we know the Fidelity International digital assets team quite well, and we like their vision. We like their commitment to growing the digital asset space. So that certainly played a role in our decision to invest in this particular asset. But generally speaking, we find that tokenized money market funds tend to have found a good product market fit within the Web3 ecosystem. So they are low risks, they are highly liquid cash equivalents, and they can be used for backing stablecoins or as collateral for lending, for example. And because of that, they can support the growth of our DeFi and our payments ecosystem. So there's definitely a strategic angle to getting those tokenized money market funds on the market, on chain. So that goes much beyond treasury management. It also kind of helps us grow our ecosystem.
Very interesting. So would love if you could elaborate even a bit more on some of these applications. For example, you said backing stablecoins with some of those money market funds. How does that work? And the other types of applications you mentioned.
Yeah, absolutely. So stablecoins are usually backed by a mix of fiat and cash equivalents. So that could be money markets, that could be treasuries. They don't have to be tokenized, but it actually helps if they are tokenized, because if you want fast and efficient redemption operations, having the underlying asset being on chain helps you automate that, helps you do this in a 24/7 kind of fashion. So regular money markets that are not tokenized, of course, yes, they're already appealing as an investment because they're stable, they're relatively liquid, but there's still some pain points going in and out of them. Settlement could take up to 2 days, 2-3 days. And with that, if you're trying to go in and out of a stable coin, then you're limited by the underlying asset attributes. Also, just the operational costs are quite high. And it's a regardless of stable coins, the access to investing in money market funds is usually limited to large institutions. So the tokenization allows for faster settlement, lower cost overall, broader market access, so including better access to retail investors, and the fact that you could trade outside market hours is also attractive. And so, yeah, it also opens up more use cases if you bring in the programmability that comes with the asset being tokenized. So you don't just need to buy it and hold it anymore. You can also borrow against it. There's a whole interplay with DeFi that is very interesting. And then for those who are not into DeFi, as you mentioned, we can reinvent the savings account by holding yield-bearing stables that are backed by money market funds, and the holders don't even know that it's backed by money market funds, but they get the advantage of the yield.
Mm-hmm. Yeah, so all different types of advantages, whether you're on the institutional side versus if you're on the retail side. Could you delve a bit into these, specifically as it relates to what are institutions finding in this? What are retail investors getting access to within the Hedera ecosystem?
Yeah, so the advantages are on both sides, right? For investors, it's better access, maybe broader access to retail, and since you can fractionalize, also you can lower the entry barrier in terms of the cost. For institutions, for the issuer, you have the advantage of operations that are more streamlined. And potential to distribute more broadly than their existing channels, because the asset now it's on chain, it can be portable. It can go into other distribution channels. It can go into potentially the DeFi ecosystems. So I think institutions are very interested in going beyond just the traditional channels, and they see the Web3 world as a place, I guess, a new ground, a new blue ocean to distribute these otherwise relatively traditional assets.
Mm-hmm. Yeah, and given the Archax recent integration of offerings from State Street, Fidelity International, LGIM, all like $1 trillion level AUM asset managers onto its regulated digital platform. How is the HBAR Foundation supporting organizations like this to build and launch their tokenized financial products within the ecosystem? What does it look like for that to happen?
Right. So we work. You're right. We work closely with organizations like Archax that operate in the RWA space, so we have integrations with a number of tokenization platforms in different areas and jurisdictions. We work with them in a number of ways. So from investing in tokenized assets, which you mentioned earlier for the Fidelity International Money Market Fund. Also, that includes providing business support. So it's important for these platforms to be well integrated within our ecosystem. This way, they can identify potential partners for asset distribution, for cross-listing, for technology, and that we also, in addition to that, we provide visibility and awareness to our community, which is very, very engaged. And overall, we try to foster synergies between our ecosystems. So, for example, by helping match supply and demand for money market funds, We can introduce stablecoin issuers because they will need it for collateral. So when that happens, it's a win-win for everyone. We increase our amount of assets on chain, and that just helps the ecosystem grow.
And shifting gears a little bit about growing the ecosystem. So we've delved into stable coins, that helps with on ramps, off ramps, taking risks off the plate, having more liquidity, more trading. We spoke about money market funds, right? That can power the growth of some of those stable coins by making it easier to buy, bringing yield on chain, giving access to retail investors to some of those instruments, expanding the relationships with asset managers and giving access to more financial products. Now let's talk a bit about collateral mobility, right? So for lending, for trading, to bring all that to double click on the liquidity building, which is the golden mode of financial services. So turning over to you, Alice, could you explain a bit that concept of collateral mobility and why is it so important in both TradFi and DeFi ecosystems?
Sure. So it's my understanding the collateral mobility is really about giving flexibility to the asset to lock up as a collateral. So in traditional finance, a lot of collateral just sit in silos, custodians, like clearing houses, that kind of thing. So it's locked and not doing much. But if you can move and reuse that collateral more easily, you can free up capital, reduce risk, and operate more efficiently. We are seeing the same pattern in issue in DeFi ecosystem. Collateral is often stuck in the single protocol or chain. But if that collateral is tokenized and mobile, you can use it across different apps, chains, and different strategies. So it opens up a lot of flexibility, especially for institutions that want to manage capital in real time. And this is where I think Hedera can really shine with our speed and code structure and compliance-ready tools. We provide the infrastructure needs to make that kind of collateral mobility possible, especially for things like tokenized fund, stable coins, and other regulated assets.
And let's double click on the specificities of Hedera's hash graph consensus mechanism, right? You have advantages like finality, low fees, high throughput. You mentioned also the compliance aspects. How do these features specifically enhance collateral mobility within DeFi?
Yeah, so Hedera works well for DeFi. I mean, because as you said, it is fast, finality in 3 to 5 seconds. So asset can move and settle quickly across different strategies. And fees are also low and stable, which make it easier to automate transactions without worrying about cost adds up. And what really helps in DeFi, and not many people in the industry is mentioning, is fair ordering. Hedera has the fair ordering features. So there is no beam pool, so you don't have to deal with the front running or bots jumping in the line with the higher gas fees. Transactions go through in the exact order they are submitted, which makes things much more fair and predictable.
Mm-hmm. Okay, so solving MEV issues,
yeah,
these sort of things, right? Allowing for orders to get canceled, right?
Exactly.
And without being front run.
Yeah.
Perfect. I think that's what a lot of a big issue that's where there are a lot of different solutions that have popped up and trying to address those. So very interesting to see. Could you also touch on how the Hedera token service, HTS, contributes to the mobility of tokenized assets like stablecoins or WS or world assets or wrapped collateral?
Sure. So Hedera token services, I think, a big part of our strategy. It allows you to tokenize asset natively on Hedera with built-in features like KYC, freeze, and transfer controls, that's huge for institutions that needs to manage risk and stay compliant, but still want to flexibility in how and where their collateral is used. So not just about moving assets, it's about moving them securely, compliantly, and with control. And we believe the Hedera token service enables that in a way that's simple for developers and institutions, but powerful for in the enterprise and the industry. And now, we support EVM. Developer can also build and interact with the tokens using Solidity and Ethereum toolings that make it easier for teams and builders already in EVM world to tap into Hedera performance and compliance feature without starting from scratch. And they can basically combine HTS and EVM and add more programmability to make their offering appealing.
Mm-hmm. Yeah, so really being part of the DeFi ecosystem composability, is that right? And making sure everything can interact.
Yeah.
And right, because at the end of the day, where if you want more liquidity and
Yes.
fragmentation goes against that, right? And if you want more distribution power, you need that liquidity to build. Fascinating. So let's have a look of what's in store for this year and for the rest of the year. So what are the key strategic initiatives that Hedera will focus on for the rest of 2025? Any exciting things coming up? Any milestones to be looking at?
I'll take that one. So I guess I'll chime in from the financial markets side, but of course there's a lot more to that, right? That's only part of the picture. But on our end, we'll continue to place a lot of emphasis on tokenized assets. We've found over the years that the RWAs and the payment space tends to be more resilient to the crazy crypto market cycles. So they're not short-lived bubbles that burst after 6 months. I think they're symptomatic of a longer-term trend, which is the on-chain migration of capital markets. So generally speaking, when we enter in a phase where the crypto speculation dies down, investors will stop chasing after unsustainable returns, and we see a flight to both safety and quality. And of course, I think RWAs are a great fit for that. It's been a slow burn over the past few years, but we're beginning to see some acceleration with the entry of institutional players over the past, say, 2 years or so. So we expect that to be a key growth driver for Hedera.
And where do you see that those institutional players coming in the growth of the ecosystems, and in what verticals, under what type of how does that shape up?
They're coming in as issuers for one thing, so more proactive in tokenizing part of their offering. So funds, for example, it's not just startups anymore, right? That are tokenizing assets, and so I think that was one of the key signals that really showed the maturing of assets on chain. And I think demand-wise, we see the demand getting stronger. We see also the type of assets being tokenized to be less exotic in a way. They're more established. And therefore now you have high quality assets on chain. In the earlier days, I think maybe there was some misunderstandings as to what assets should be on chain and where the demand would be, that I think that's been through a few iterations of trial and error. And the product market fit is beginning to solidify. So yeah, I think maybe tokenizing, like, I don't know, a used car doesn't make much sense, but tokenizing assets that are otherwise inaccessible to retail, and maybe there's a demand from retail, that makes maybe more sense, right? So we're beginning to see that kind of come into play, and obviously I mentioned earlier the product market fit between money market funds and stable coins. I think stable coins are the other big area in our outlook for financial markets that we see a lot of growth in. I mean, there's a lot of new stable coins popping up left and right, so you probably noticed that as well. But the thing that's new in the past maybe year and a half or so is that stablecoins are increasingly used outside of the crypto markets. It's not just for trading anymore. It's being used increasingly for payments, and that's what I think is super exciting, because they're graduating from crypto, they're going into the real world, and obviously there are regulatory breakthroughs that have happened in the past couple of years with MiCA. You mentioned the Genius Act as well in the US, and other jurisdictions as well. They're all kind of racing to have the best framework and the most attractive sandboxes. So we see that we talk to a lot of startups in that space, both RWAs and stablecoins, and we feel like it's a very exciting space to be in right now, because they're essentially rewriting the infrastructure and solving meaningful pain points like remittance, like cross-border B2B payments.
Yes, remittances and cross-border transfers and payments are, to say the least, not frictionless.
Exactly. So it's not a solution looking for a problem. It is a real tangible use case, and we see that getting adopted. We see a lot of startups actually getting into that payment space using stable coins in sometimes invisible ways, because you on-ramp and then you off-ramp. But it is meaningful.
Great to see this. And maybe Alice, you wanted to give us also a bit of a perspective on the BD side of things, and what you're working on and looking forward in 2025.
I'm trying to have a more Hedera-based stablecoin adoption in the ecosystem partners, like more centralized exchange support, on and off-ramp support, like globally. So we are having a good dialogue with the partners, so stay tuned.
Yeah,
great to hear.
Alice has worked really hard on getting all these on-off ramps and exchanges to support Hedera and the Hedera token service. It's finally, I think it's paying off, as you noticed. One other area that I think is super interesting is the intersection of AI and fintech. So agentic payments, beginning to see. So it's going to be very, very interesting, where you'll have potentially you'll be able to outsource your portfolio management and your investments, your DeFi to an agent. I see a lot of activity in that space. So I think it's going to need maybe frameworks, legal, maybe regulatory frameworks to provide some safeguards. But there's a lot of experimentation happening in that space that I think maybe a few years from now might be mainstream.
Mm-hmm. Yeah, it's a fascinating space, and also it's the ability to stream micro payments is also fascinating, and agentic payments and where that's going to be growing. Great. Are there any specific partnerships, projects that you're particularly excited about, and that you feel will be a significant contributor to the growth of the Hedera ecosystem this year?
Yes, many. And I mean, to continue kind of the focus on the RWA space, you've mentioned Archax already. We've also made some key integrations recently. We integrated with Zonix, which is another asset tokenization platform based out of the US. We integrated with Tokeny. Now they're supporting Hedera. Tokeny is asset tokenization stack based out of Luxembourg. And they are the authors of the ERC 3643 token format, which is open source. And they created recently an association that we joined. And that format already supports billions of assets tokenized. So it's very widely accepted. So we're quite excited to be to now be supported there.
Can you say maybe a bit more about what what this type of token is?
Yeah. So Zonix and Tokeny both have compliant security token type format. So Zonix is ERC 7518, I believe, and Tokeny is ERC 3643. And they have kind of slightly different approaches. But for example, for ERC 3643, you have the ID on chain, which means your token is quite portable because you're able to not have to redo the KYC every time. You can actually take the token from one platform potentially to another, which opens up all sorts of interesting use cases. And also the focus on compliance is important.
So it basically allows you to have some kind of ring fencing and KYC on permissionless blockchain.
Exactly. So it's the token is permissioned, but it can circulate on a permissionless blockchain. So yeah, that's quite well adopted. And Zonix has a very also interesting format, ERC 7518, which also is compliant and includes the regulation attributes in the token. And in some, I guess, more specialized areas, we're also building our portfolio in the tokenized real estate space. So we've been working quite closely with Red Swan, which is a platform based out of the US, with tokenized assets globally. They have billions tokenized already. They are now beginning to issue on Hedera. And we work quite closely with them to build our open source asset tokenization studio, which is it's a toolkit that's now available to any builder on Hedera. So we launched it a few months ago. I think you can expect this year. You can expect a broader asset coverage. Right now, it supports equity and debt. We're looking to support other more complex types of assets out of it. Support more jurisdictions as well. Right now, it supports US SEC jurisdiction. So yeah, this is a product that we keep on building. So there will be updates to that. Same for the Stablecoin studio that Alice mentioned earlier. That's another toolkit that is getting good traction. So we're looking forward to seeing more compliant stablecoins being issued on Hedera. Some are already public. We have a UDD in Australia that is in the works. PHPX, which is it's going to be issued by a consortium of banks in the Philippines, which we're pretty excited about as well.
Exciting. So before we wrap up, would love to hear from both of you. Where can we find you? Any final words? Anything you're excited about for this year? So Alice, let's start with you.
Yeah, I'm super reachable. You can find me on LinkedIn, and if it is Asia located at conferences, we try to be there as well as a speaker or just attending the big conferences. So feel free to reach out to us if you, me especially, if there's anything that you love to discuss with me. I'm super excited about the stablecoin growth in our ecosystem. I think the 150% is just starting. You will see more growth this year. Yeah.
And as for me, so like Alice, I'm based in Asia, so we'll be doing some of the large conferences there. Token 2049 in Singapore will be there. Also be at the FinTech Festival in Singapore, which is not it's not a crypto conference, but it's quite interesting to see the adoption happening actually at a mainstream conference like that one. I don't think I'll be at conferences outside of Asia because we have a lot of ground to cover already. But I know that the greater Hedera team will be at Consensus in Toronto soon, and I'm sure I think many more across the year in North America and Europe. Usually they do the main ones. So yeah, happy to chat if you guys are in Singapore, and I'm also going to be at the Currency Research Conference, which is a smaller one, but that one's in Bangkok at the end of the month.
Wonderful. Yeah, we know the conference circuit is never ends in crypto, so it's exciting. Well, thank you so much to everyone for joining us today. Thank you so much, Alice and Sabrina, for sharing your insights. And this concludes our quarterly Hedera webinar. So thank you, everyone, and see you next time.
Thank you, Sacha.
Thank you.